Hello and welcome to the latest Insider interview. Our guest today is Thiemo Lang, manager of the Polar Capital Smart Energy Fund. Thiemo, thank you very much for coming in.
Thank you for having invited me.
The active share of the portfolio is 98%, so there's just a 2% overlap with the MSCI All Country World Index. That means you look nothing like the index at all. Why is that? Why is there such a small overlap with the benchmark?
Yeah, the clean energy sector is a highly thematic, limited area of investing. We have 250 companies now eligible universe, and therefore this is not a broadly investing global equities fund. This is really a fund focusing on the companies we think we are confident that will drive here our energy transition. And therefore, for sure, yeah, we have a pretty high tracking error also to the MSCI World, 12% right now. And this shows if you invest in a product like ours, then you have to also accept a certain volatility compared to the broader indices.
And what types of markets will this fund generally perform best in and worst in? Is there a theme there, or are you very much tied to the stocks and how they do on a fundamental basis?
Yeah, I mean, we have sectors which are very interest rate sensitive, that's for sure.
Can you explain that? Why are the companies interest rate sensitive?
Now, for example, the build out of new renewable power capacity, etc., is your cost of capital goes up if the interest rates go up. And also from the sentiment perspective, right? Whenever we see interest rates going up, then this sector, for example, is hit. Or also, you mentioned before the electric vehicles, for sure the consumer behavior will change if the interest rates go up. And even though the electric vehicles gain market share to combustion engine cars, you will still see that the consumer might become more cautious. And therefore, we have an interest rate sensitivity in this product, which we have to accept.
And the fund's been going for about 2.5 years now. It's underperformed the benchmark. Is that all linked to macroeconomic factors, or have there been stock-specific issues as well?
Yeah, the clean energy sector has underperformed MSCI, but actually, to be fair, we have done fairly okay. So we compare ourselves more to our internal benchmark, which consists of these 250 companies, and here we have done actually very well. And this is also our benchmark we are measured against internally. And we have also done very well to the peer group. So very interestingly, we compare ourselves to 8 peer group funds, which are only 1 billion assets under management and plus. And here actually we have outperformed the average of the peer group since inception by 10-12%, which is pretty good. And also historically, actually, we tended to outperform the average of the peer group by 3%. And this is also now our ambition to repeat this.
Clean energy is a sector that is quite vulnerable to hype, to overexcitement and then over-pessimism. We saw a lot of excitement in 2020, 2021, a lot of pessimism last year. Where are we, do you think, in this cycle of optimism and pessimism towards the sector? Is now a good time to be investing in it?
I think so, because 22 was also there was a bit of hype due to the IRA in the US.
The Inflation Reduction Act.
Yeah, signed by Joe Biden in August 22. There was some sort of hype also with what happened in Ukraine, the invasion of Russia into Ukraine. We have seen lots of panic also from our governments, right, in accelerating now the energy transition, and this has also supported the valuation of the companies. Since then, yeah, we have seen more like a sort of correction, and actually very important if you invest in clean energy is really not to put all your eggs in one basket, meaning putting all your investments in the upstream clean power generation cluster. You really have to look at the whole value chain, and we see actually more value in the infrastructure build out and then on the energy efficiency side than really in the power generation side. And therefore all the funds that have overemphasized and continue to overemphasize solar and wind, to put it simple, and they got hit pretty hard last year. And we have done actually pretty well. We have actually in our US dollar share class was up 18%, MSCI was 22, so it's fine now. But we have seen peer group funds, which were really strongly negative last year.
The Inflation Reduction Act in the US, can you explain what that is and why it's good for the clean energy sector?
Yeah, the Inflation Reduction Act has it as its objective to accelerate the deployment of clean power solutions, of battery production, of electric vehicles, and has also an element to insource manufacturing into the US again. And they say the whole program will cost $370 billion over 10 years, but probably the cost will be much higher. And yeah, so there are very supportive elements for the acceleration of the deployments of clean energy solutions and the related infrastructure, which is good. But in the same time, it has also elements where we are a bit more skeptic. Like, does it really make sense to really build up module manufacturing in the US or other final assembly in the US? And therefore, it's good somehow. But on the other hand, you have to be also very aware of risks that are linked to some subsidy schemes that might not last forever.
You brought me on to the issue of politics.
Yeah.
And politics is a big theme when it comes to renewable energy. Every party has a different view on it. Lots of voters vote depending on what the parties will do regarding climate change. So is this something that you have to adjust your portfolio for? And what are the big risks around having a politically sensitive investment area?
The political landscape and what might then be decided from any new political leaders has an impact on us and our sectors, at least on the short run. And we have to be aware of it. Also in the US, right? We don't know if a Republican government follows, they might maybe amend or even cancel parts of the IRA. We don't think we are too exposed there right now. And actually what we prefer also to invest in is really not companies which are 100% dependent on politics and subsidies and protection, nothing else. We really want the subsectors in clean energy to become self-sustained without any strong governmental frameworks necessary for them to thrive. We really want to drive down costs, and we really actually focus our investments on those companies where we see that they will make their way with or without any short-term interferences from politicians.
And which are those companies and sectors that can win regardless of who's in office? Again,
we are 100% convinced that the trend towards electrification is unstoppable, right? And also the trend towards renewable deployment is unstoppable. We drive down the unit cost, solar, we drive down the unit cost of a solar module by 8% each year. And therefore it's just becoming the cheapest form of energy generation over the long run in most of the countries of this world. And then we have to develop it further. We have to develop storage units, batteries, which are also coming down in price. We have to develop intelligent smart grids. We have to develop a IT overlay for the grid where we can always then match demand and supply. So all the companies that add intelligence to the way how we produce, transmit and consume energy, these are the companies you should invest in.
And what about electricity grids, particularly in the UK? I've heard that although the technology can be there to produce the electricity, actually distributing it to households will lag a long way behind. Is that something you think about?
It's a huge issue now that we have to actually accelerate the build out of the grid. So adding more and more renewable capacity is one part of the story. But now I think the big theme over the next 5 to 10 years really that we have to catch up in really also building out the grid not only on a national scale but also on a global scale. Right? The larger your grid is, a pan-European grid, the better it is. Right? That in the end you can transmit hydropower generated electricity from Norway to Spain if you want. Right? And therefore the broader and more international and stronger a grid is, the better it is and the most efficient it is.
Europe is very forward-thinking when it comes to renewable energy. But what about India and China? Nearly 3 billion people there. Are we seeing the introduction of renewable energy in those markets as well? And does that help your portfolio?
India not so much yet, but China is the biggest deployer of renewable energies. The solar market last year was, I don't know, 420 gigawatts or so. More than half of it was in China. In China, they have a renewable energy target of deployments of solar and wind. It's, I think, 1,200 gigawatts in 2030. And they will actually, and they have put out this target in 2020, and they will actually achieve it already this year. So 6 years ahead. So China is doing the most of all the countries worldwide in really deploying solar and wind.
And finally, the question we ask all of our guests: do you personally invest in your fund?
Yeah, I'm strongly invested in my products. Yeah.
Thiemo, thank you very much for coming in.
Thank you for your interest. Yeah.
And that's all we have time for today. You can check out more insider interviews on our YouTube channel, where you can like, comment, and subscribe. See you next time.